Hey guys, just wanted to show you a quick video how this area in red here can predict the next day. Not to a T, but it can give you clues. So you'll notice kind of there's like a little dip here, a little cup shape, and then another cup shape. And that would be replicated here. Here's one cup, and then the next one right here. So that's pretty interesting for sure. This is the 15-minute chart. British pound, Japanese yen, and I'll just pause it for a second, then I'll go to the next clip. So here's the next example, just the next day. The area in red starts at 7 p.m. New York time, ends midnight, and a couple of things stand out here. Um, it's kind of got like two high points here on this area in red. Um, it's got a flat bottom here in the middle between those 2 points. Then if you look over on the day here, you might call this one of those high points on the left. In the middle, point here, flat bottom. And then over here, this could be your flat tops. So I'll just pause it for a second. You can have a look at that for yourself. Then I'll move on to the next example. Yeah, and here's the next example. Kind of gives you clues what's going to happen in the next day. So the first thing that stands out for me is this high point here. Here's the high point here. That high point ends here and it starts here. And it's replicated here and here. Yeah, and another area that stands out, there's kind of some chop that kind of goes down here before that run up. You can kind of see that here, down, kind of chopping before it's run up. And in the next example, you'll see kind of the same thing. Yeah, and here's the next example. First thing I kind of notice, it's the first time seeing this one, run down, run up, kind of an M pattern here at the very top if you look between the two. The red example here doesn't really have an M, but if you kind of use your imagination on the black here, you can kind of see a little bit of an M formation. Comes down, replicated on the black, kind of goes back up, replicated on the black, and comes back down again. This low point here being replicated here. And then it finishes the day with a slight run up, replicated here in red with a little run up. Yeah, really interesting. Move on to the next example. Yeah, and here's the next example. So I always just ask myself, how am I going to use this information here to predict the next trading day in black here? So you might look here and say the day is going to start out kind of sideways with a little bit of chop. And then this long wick here and this run up, that's telling me something's going to happen. And it's going to cause a great disturbance here. And then it's going to have a huge pullback. And then another run up. And then another pullback. So that'd probably tell me that this is going to be a pretty choppy day. Where to enter, where to exit. Yeah, that's another thing, but this would have told me maybe to enter initially and then just let it ride up until midday, maybe take partials out and maybe leave it for the end of the day and then just close the position. But then if you look here in black, that's definitely not what happened. If you would have held on for a buy there at the start of the day, you would have just been destroyed. So definitely more analysis needs to be taking place with this example for sure. But you can definitely see some of the characteristics in this, like up, down, right in the middle, up, down, and that's all in the middle. But what you don't really see is a little run up and a huge run down. So that could be this, run up, run down. But maybe the takeaway from this example would be just these huge, huge wicks and these huge moves. Yeah, this might be one of those examples where you should stay away from this trading day. So that's looks like a Sunday going into a Monday. So this is, yeah, your analysis for this day probably would have been just to stay away from this day due to these wicks and these huge choppy moves. And that's kind of what you see here in this day. This huge wick here could have been this one here, but it looks opposite in a way. So interesting anyhow. Move on to the next example. Yeah, so here's the next example. Area in red here, using this to predict this next trading day for us. Finishes here at midnight, starts at 7 p.m. New York time. So looking at this for my first time, a couple things that stand out is flat top here, big candles and a wick. High of the day with a wick. Big run down here. Drastic low with the wick. Run up, run down, finishes the day. So here in the area in black, this huge move up with a flat top. Looks like it's replicated here. And then our low of the day here and here. I guess that would have been our replication. And then our next high after that here. So that could have been right here. And then a run back down here. That would have been the end of the day. So from the high to the end of the day, in here somewhere. So entry point using this information for the day. Well, if that's the high, maybe you would have just entered there. But how do you know it's the, well, yeah, I guess once this period is finished, the area in red, you'd call that the high. Yeah, it's a tough call to make, where to enter and where to exit. But generally, not too sure on this one, guys. Definitely more analysis has to be taking place. But if you have any ideas, get in touch with me or leave a comment below and we can work together on cracking this code. Move on to the next example. Okay, so I just zoomed out and I put this green dotted line right in front of that red period we were looking at. So it looks like we're in a big downtrend here. So maybe the analysis would be, if you're already going in a downtrend, that your bias would be maybe to start at the beginning of the day, sell at the beginning of the day, expect a down move. Yeah, so the next day, yeah, this is a pretty good example. So move up, move down, gradual move, rounded top, I mean. So there's your bottom, replicated by here. It's your bottom. Top of the day kind of rounds out up here. And there's a lot of chop between the two examples, but the overall form is definitely there for sure. Yeah. Chop down, slow move up, chop down, slow move up. A lot of chop here at the very top. A lot of chop here at the very top. There's a big candle in there. There's a big candle. So if you're going to use this here to predict your trading day, you might expect just a drop in price during the first part of the trading session. So here's your drop, and then that could be a good buy spot. And then near the end of the day, just to sell. Just close your buy order near the end of the day. So that's a good example. I'll just pause it and zoom out. The green dot being in front of our red session. One sec. Yeah, so you can see here there's the drop in our session, and then the run up. So overall, downtrend, we're at the bottom of that downtrend, and then we're running back up here. Zoom in a bit more. Yeah, so there's our drop, run up, drop, run up. Sorry, here's the run up. Yeah, so that was kind of the start of the move for our bull run. So yeah, really interesting. I'll look at the next example. I'll just pause it and I'll go to the next example. Okay, so here's the next example. The only thing that really stands out for me here is this move down with the wick. Big move down here, then goes back up. So move down, back up, and then back down. Down, up, back down. The only thing that's inverse is this top here. Doesn't have this top here. I've kind of been thinking though that some things are inversed in the replication from this overall red pattern to the next day. Some things just seem to be inverse, or else the changes are so minute on the moves in the red and they're exaggerated in the next day. So not much to say in this example except for the last part, showing some similarities, unless you guys see anything else. This is Thursday going into Friday. And I'll zoom out quickly. There we are zoomed out. Red session right about here. And this is kind of the high for our short bull run. So a short-lived bull run for sure. I'll zoom in a bit more. Okay, I'll move on to the next example. Okay, so this is the top of our bull run. Yeah, this is a really good example. So drop down, kind of a cup formation, and there's our high. So overall in the black, drop down, cup formation, run up, there's our high, end of the day, low. So overall great replication. So this is an interesting point here. So there's kind of a high in our cup formation. There's our high in a cup formation. There's the cup. There's the point in the cup. Here's our cup in black. Point in the cup. Yeah, really interesting. Where would you enter and exit? It's kind of telling me from this example in red here, just to buy at the start of the day, or sorry, to sell at the start of the day. Look for a double bottom. Bottom of the cup. But then when you go over here, the area in black, if you put a sell order when the day starts, and then, you know, you don't know where the bottom of the cup is. But if you're trying to spot a flat bottom here, you know, this is pretty flat, except it's got a wick here. This is pretty flat here. It's got a wick here on this side though. But either way, those are two great spots to close your sell order, especially here. And then if you did notice this, your spike in your cup, so cup, spike, that could have been another place to put a sell order in. That's pretty risky though, because there's so much chop in here. How do you know that's going to happen on the next day, right? But it is prominent. Like if you go from here to here, that's a prominent spike. So could be a good dice roll, but not really what we're looking for. Rolling the dice here. You want something a little bit more solid. So here to here, look for flat bottoms. So that's Sunday going into Monday example. And I'll zoom out again here so you can see the overall structure. Okay, so we're zoomed out. So this was our low point of the overall structure. This was our move up. Bottom here, move up. This is the top. Then it starts its bull run. Sorry, starts its bear run. Just a short bear run in this direction. And then the bottom is at the tip here. So yeah, once again, using this area in red here to predict the next day. It almost looks similar to this area right here. It's got a cup with a spike in the middle, cup with a spike in the middle, cup in black here with a spike in the middle. And then here's our next day here that we haven't checked out. But it's almost like a cup with a spike in the middle. But that's kind of out of what we've been doing so far. So I'll zoom in on that example right now. Okay, so we're zoomed in, and we're kind of trending down a little bit, just at the top of our finishing bull run, and we're going downwards. We're trying to use this red area here to predict the next trading day. So you got a low point here, low point here. That's right before the midpoint of the day. Got a long wick here, long wick here. So long wick here to move up. And then there's the top of the day. So that's a pretty good replication. And then you move downwards. And then finishes the day with the move up. Same thing here, move downward. Then the move up to end the day. So that to me is a pretty good example, pretty good replication. Where to enter and exit, or where to take your trades. This is a pretty big candle. So this overall pattern could be telling you to wait for a drop, wait for a large drop, buy shortly after the drop. So here's your drop, buy at the drop, and then wait for the move up. So there's the move up, consolidation. Could also call that just a lot of movement, a lot of chop. And then close your buy order somewhere near that big move. So yeah, if you bought here once again, held on to it for the majority of the day, probably would have got scared out with all this big wick here. That'd have to be a pretty big stop loss. So you might have just want to take this first move and call that a day. Like if you see this big wick here, that could be telling you that it's going to be a pretty crazy day. So you might have chose just to catch this first move before this. So just to kind of, your mentality might just be just to get out while the going's good kind of thing. So that'd have been a pretty good trading day using that analysis. And then maybe after you see this big wick here replicated the next day, so some kind of a big move you're expecting here in the next day. So that would have been this. So after you see that, you'd be expecting a big move down. So you'd be trying to catch this top here. So you'd be expecting a lot of crazy movement, then a run up. So that's not really here though. You got your crazy movement, got a little bit of a run up here. And then you'd want to put your sell in and then get the bottom. Get the bottom. And this here is telling me you've got 2 points to close that sell order. So that could be here. Then there's your replication here, next bottom. So cell point here, replicated by this point here and this point here. Yeah, so there's a couple things to think about. Let me know what you think, guys. This is Monday, July 23rd. Sorry, Monday 17th, July the 17th, 2023, going into Tuesday. And I'll zoom out here again. Okay, so here we are zoomed out again, green line right in front of our area in red. So I said it was bearish, and it kind of is, but so here's our bottom here, and then our run up, and then this is kind of the very top of our short bull run, and then it's going back down here, and then this is the bottom. And then I'll zoom out a bit more. And then it kind of runs back up here. And this would be the top of our next bear run, and then goes back down. So I'll save that for part 2. So part 2 will actually be this next session here we'll be doing. So this will be, yeah, depends how you look at it, but hope you guys like the video. Hopefully we can all work together to kind of figure out this style of algorithmic trading. Yeah, see you guys. Cheers. Bye.